Hello, thank you for clicking. My name is Mark Mitchell. I'm a mortgage broker in London, Ontario. And today I just want to go over the difference between fixed and variable rates and whether or not you should consider locking into a fixed rate mortgage in the light of what the Bank of Canada recently announced. So last week the Bank of Canada announced that it was moving up its timeline for when it thinks it will have to raise interest rates from 2023 to 2022. This definitely made headlines because just as early as January this year, the bank had announced it didn't expect to see economic growth hitting a point where it would have to raise interest rates until at least 2023, if not later. Since COVID hit in 2020, borrowers have been able to take advantage of really low interest rates as the Bank of Canada reduced its benchmark rate to 0.25%. And the majority of the mortgage lenders reduced their prime rate to follow. If we look at prime rates right now, it's at 2.45, with the lowest variable rate right now that I can get at prime minus 1.2. A lot of borrowers were able to pay 1.25 on their current mortgage. However, I've been seeing some evidence lately that it could be time to lock in your mortgage in the wake of what the bank has said and what a lot of the lenders are doing vis-a-vis their fixed-rate mortgages. Conventional wisdom seems to argue that variable rate mortgages are always the best. And if we look at the previous 10 years, there's been numerous studies showing that variable mortgage rates do tend to outperform fixed mortgage rates. There is some risk involved, obviously, and you do have to be able to handle the swings. But there are certain circumstances where variable rates are definitely the way to go. With that said, as we know, 2021 and 2020 are not normal times. They're not normal times for interest rates, especially as the Bank of Canada has sought to really just prop up our economy by making it much, much cheaper to borrow. That does seem to be changing, though, especially on the side of the mortgage lenders. And this is really what comes down to the reason for this video today. I had clients 2 months ago who were looking into refinancing their mortgage. At that time, I had sent a quote saying we could do it for 1.74%. Now, a lot has changed in the last 2 months in that the economy does seem to be speeding up. The vaccine rollout is going better and better every day. And even the Bank of Canada has, like we said, has indicated that it will be raising rates sooner rather than later. So, the clients and I just revisited looking at refinancing their house, and now the lowest rate I can get is 2.24. So we're looking at about a 0.5% difference in less than a 2-month window between variable or fixed. Now, if you're in a variable rate mortgage and you have lots of room to play, where your income, you have a lot left over after you make your mortgage payments, so you can withstand the swings, then that's great. If mortgage rates do go up by a 0.5%, as we've seen, or by a full percent, you can handle the swing to your income. That's not the case with everybody. So while yes, it's true that you can always lock in your variable rate into a fixed rate mortgage if rates do start to rise, that doesn't mean you can lock in at today's fixed rates. You'll be having to lock in at the rates at the time. We've seen a 0.5% increase in the best fixed rate mortgage that these clients could get. So while yes, if they had been in a variable mortgage, they can always lock in anytime they want. But the real question is, what rate can you lock into? So if you're thinking that you might want to lock in over the next 1 or 2 years, or that you might want to change around the terms of your mortgage over the next 1 or 2 years, then it might be better to do it sooner rather than later, only because once those rates do start to go up, once the Bank of Canada does start to raise its rates, it very well could happen quickly. And you might not be able to get the same rate in 3 months from now as you can right now. If you have any comments or questions, please do list them below. And if you like this video, please do click like and subscribe. And we'll have more updates as the Bank of Canada talks more about interest rates and mortgage rates and the real estate market. Thank you.